Good day, gang. Welcome to Forward Focus. It is Friday, September 13th, and we've just had a little bit of fun action here in the market just now, haven't we? Interesting note. I don't actually have a television in my office. I haven't for probably a good 10 years or so. So I like to pay attention to what is going on with actual price action as opposed to, what random news event might be coming out. So there's not much you can do when something, random happens, but oh, nice job, Richie. Yeah, so but oftentimes you can see something that is about to happen before news hits, because you know what happens is the news companies, they go and they will attribute whatever the most recent news is to whatever the current market action is. So a lot of times even their statements are many times like best guesses on stuff. I'm going to show you guys what is going on here in the markets in 1 second. So what you are going to find is that, hold on 1 second, guys. I gotta put a bracket order here on a position I've got. Do this fast. Alrighty, so what happens is, let me show you. I'm gonna go pull up the S&P 500, because the S&P 500 had this gorgeous head and shoulders pattern that was forming on the larger time frame charts as we were heading into today. You can see it here on the 20,000 tick right here. Here's your shoulder, here's your head, here's the shoulder. Now, what you will notice, however, is that news hit, or assume news, after that went and was already starting to develop that right shoulder. So let me scroll on over here. I'll show you guys this in some more detail. So here is a 2000 tick chart. And here is what this looks like here. And what you can see is that, clear this. Here is our shoulder, head, shoulder. This is our neckline. Kind of a straight line, right? Sort of. Okay, not really. But that is our neckline there. And then what you'll notice here is that there's two main moves up. So this creates this lovely measured move here, you guys. And a little bit of a blurb here. This is where I shorted. So there's actually, let's see, what is it? It is the 61.8% retracement of a previous larger trend. So there was actually a good level of Fibonacci resistance at this point as well. So it wasn't just the fact that we had a head and shoulders going on. It wasn't just the fact that there was a two-wave measured move and just the little blurb from the excess measured move. There's all of these things coming together created that short strategy. Let me go into a little bit more detail here. I'm going to drop down a little bit smaller. And here is the action on a little bit more of a detailed chart. So this is that right shoulder. So what you'll see is we actually have the smaller head and shoulders in here. And my short was in this zone. And then I added back into it here when it did kind of like that little extra blurb, because it was coming into a lot of resistance in there. So that's what I was looking for. And when things went crazy, it actually was a confirmation of this other channel break over here. So we had that confirmation with the break. Here's your first 1, 2 down. Kind of opens up with more back and forth action here. So even though, it kind of caught everybody off guard and that this fell within just a matter of seconds. Here's a 5-minute chart so you can see what it looks like on the 5-minute chart. 2-minute chart, look at that. Really rapid drop there, right? But it already was telling us ahead of time, hey, this is coming, watch out. Do not be shocked when this happens because it is on its way. And here's a 1-minute. And then, oh, that's still a 1-minute. Let's change this to like a 15-second. So here's your 15-second chart. So that tells you how fast that goes. That means, once this is underway, you don't really have a choice in the matter as far as trying to get into that trade because it's already going really, really strong. Even if you hit a market order, you're going to have horrible slippage getting into that. So it's just not going to be so much fun there trying to get into the trade at that point. You got to be prepared based upon what is going on those larger time frames. And that is what's going to save you. So let's back this up. We're going to go way back here. And we're going to look at what is going on the daily time frame, weekly time frame, everything like that. So on our daily charts, what we have here is that this is formed this, I'm going to grab my drawing pen, almost a 2T, but it doesn't go to that higher high to create a full 2T. So what we're seeing is that it still is a little bit shy of where potential resistance could be. So it still kind of leaves things open here. So it's not like a clear cut, hey, this is going to go one way, this is going to go the other way on this daily chart, because it can really go either way based upon what is happening right now. So what we have to do is we've got to watch what is going on the smaller time frames instead. Let me go down. Here's the 240-minute. And the 240-minute gives us a little bit of a better view of everything that is happening in here. So instead of getting just that rapid turnaround, we actually have things shifting momentum that is leading to the further downside that we're seeing this week. And I am in a trade right now, so I have to do some adjustments here as we're going along, you guys. So give me just a second here. I'm like adjusting my stops and stuff here as we're talking. I usually try to get out of everything before we go into a session, but that doesn't always happen, you know? So let me adjust this here. Best laid plans, right? What am I in? I am in gold. All right. So on this 240-minute chart, as I was saying, we are dealing with this shift in momentum here. So we have basically a two-wave move up, which is also part of 2 and 2. This brings us back into that really strong level of resistance that's going on over here. And what we're seeing at this point is that the market shifted. It had this change in momentum here. Is a little bit of an avalanche, but it wasn't a really pretty one, was it, guys? It was kind of a choppy, messy market. You'll probably recall back in the last week or so that the market was just really, really sloppy. It was hard to get any good trades on at that point. We didn't have a lot of good setups that first half of the week, and it was a much more difficult trading environment. So what tends to happen is that in cases like this, things go a little bit crazy, and we'll get a lot more of that back and forth whippiness, and then we get things really moving. We get things that can take off where the momentum increases. We get a much stronger move where it just gives us those sharper drops. And we've been talking a lot about support and resistance in League of Traders lately. And when we're looking at the support and resistance levels, when we're looking at these highs like this, and it blows through those highs, typically what tends to happen is that that zone is going to again serve as support. So when it comes back into that level, we see some really good setups at that point. I'm going to scroll this over here. We're going to look at the details on this drop a little bit more here. So this is this as it comes over. And you can see that the rapid drop here today really wasn't that unusual. Yes, it was a little bit crazy compared to what we had seen throughout the day so far. But in the context of the overall market, really wasn't a lot. We've seen so many impulse moves in the past that are very, very similar. So it's not like this suddenly went and had this crazy impulse move out of the middle of nowhere today where it just went gangbusters. That didn't happen. We already had plenty of examples of these impulse moves in the past, both ways, even with the gap, for example, here, where we've seen almost these straight down flushes just in a matter of minutes. And that's what we saw happening today. If we look at this in a little bit more detail here on the 30-minute chart, what you can see is that we have a shift in momentum here again, just at this level, that leads to the breakdown here this afternoon also. Now, what does this mean as far as what's coming up? You know, what can we expect from the next couple of weeks, even just going into next week? What I'm looking at is currently, because of how this pulled back here, this is most likely to try to go out longer here. And what I'm looking for specifically is going to be a shallow avalanche, something that can bring in more selling, stronger selling as we go into next month. That means that we have to really pay attention to the momentum in here, because remember what was going on that daily chart? It had room to be able to pull up higher on that daily chart. So what we need to see now is, will the action on like the 240-minute over the next couple of weeks, will that continue to give us that same bias that we are seeing on the daily time frame, or is it going to go with kind of more of what we're seeing on the smaller intraday time frame? Daily time frame had the room to go for that third measured high being the distance between the highs. Whereas the intraday 240-minute chart, we have this two-wave move down where there's a little bit stronger momentum on that second move. So the momentum within each of these waves is strong, even though the channel is weaker. So we often see situations where it can go and have a two-wave move back to the upside, and the overall channel will form like this. And then that can lead to a much stronger drop. Now, given the current news environment we're in with, talk of impeachments, that type of thing, that is certainly going to play a role here too as, things go forward. So we're going to have to see if that indeed plays out. That would certainly help fuel this decline here. Market doesn't like that kind of uncertainty. And we've been really seeing that lately, and it definitely has that chance to kind of pick up here. Do I think that algos were overriding influence in the severity of the downward move? And if so, how does this influence your setup? I do think that that is a possibility. A lot of like the main things that go into our technical analysis, main things that we look at, like things like measured move, previous highs and lows, those are things that can drive a lot of these algos. Head and shoulders patterns, those are things that can be programmed into programs. So we will see that, so that when channels break coming after that, they will increase the severity of the drops as well. So that can certainly be something that plays a role. I try not to overthink that too much because I really don't know. I don't have like the insight into like how all of their programs are set up. But it is definitely true that over the last decade, we do see a much greater like overreaction to things. So we see a lot more of these just kind of really rapid moves. And that's definitely something that's been happening over the last decade. It wasn't as common back when I started trading. Yes, we did start to have, more computerized trading in the late 90s, but it wasn't anything like to the degree that we currently see today. So I'm not sure how much of an impact that plays, but I would say that it definitely does play some sort of a role in there. Let's move on out. I'm going to pull on back here. I'm going to pull up our NASDAQ. So here's what we got going on the NASDAQ. I'm going to pull back here. So here's our monthly. So you can see things are really, widening up, starting to go crazy in here. I know we've repeated this like every week, but we've really got like a third move in basically an explosive sell or exhaustion type of event up here. And so what we're going to be basically expecting over the next number of years here really is a continuation of these wider types of swings happening. We'll see more of this back and forth action. So what you're seeing here over, the last 2 years, it's kind of going to be like the norm here as we go forward. I don't have a daily on this one. Let's move this over here. We'll look at the weekly first here for you, and then we'll switch it over to the daily. So here's the weekly. You can see we've got a little bit of a head and shoulders trying up there, but it wasn't really an ideal scenario for a head and shoulders. What I like to see with the head and shoulders is that we get even spacing between those highs. That's not happening here. We don't have that even spacing. So that's causing a little bit of a problem with this developing as well. We would have liked to have seen like a nice smoother two-wave move down here, and then, this little bit of a smoother move up, basically exactly what we saw going on the S&P 500. That's what would have been preferable to bring in the stronger downside. So didn't quite have that, but kind of the spirit of it is in here. The problem with the drop and the way it's come back is, again, just like we saw on the S&P, this still really does have room that it could still come up into the zone of this previous high here because it still has that amount of time development that it can do, and it really only has one main swing up on this weekly chart here. So let me go over here to a smaller time frame. I'm going to show you the daily. Right, as Donna said, 0.5 on the weekly has not hit on our wedge. So here's our daily. So what we're seeing on this daily here, grab my pen, is that if, the best way for this to have gone up and put in that measured move here, the best way for that to happen would be to do a 2T. And usually what that would do is it would come up here just shy of this previous high. It would go into a two-wave correction, and then it would go back up and do the third high. So it would have the two swings up, the two-wave correction, and then the two swings back up. And that would create a major reversal point there. Well, this correction portion is not exactly what we would want to see for textbook for that. It kind of rounded off a little bit into this high instead of holding as like a pure pivot. And the two-wave correction went and gained momentum. So we've got a really strong drop on that second wave. So something would need to come back up and shift that momentum again in order to get that 2T pattern happening. So 2T is when you get a high, you usually get a two-wave move down, you'll get a move up, you'll get a measured move up, and then it's going to turn back around. The whole market had really awesome examples of this yesterday. And in here, you'll get two waves, two waves, two waves, usually a little baby shift in momentum, and that will turn the trend around. This can be part of a bigger momentum reversal, which means that, you might have had another high over here. So you get 1, 2, 3 highs total, and that's what's going on here. We're just not quite getting that third high yet over there. So at this point, things are kind of iffy. They really still could go either way, just depending upon how momentum shifts here. If this manages to come back up here and do a shoulder, so we get this inverse head and shoulders into early October, that can still give us that break higher. So we have to watch this momentum at this point. What that's going to mean, unfortunately, is that so many of the trades at this point are going to be shorter term. They're not going to be as good for swing trading, especially for position trading right now, because the timing is just not that good on these larger charts here. Let's go back down in here to the intraday again. What we're seeing on the 20,000 tick on the NQ here is the head and shoulders that we've been talking about over the last couple of weeks, the two-wave correction, and then this went and did this shift here. So we had a two-wave bounce, and it's trying to do a two-wave pullback. It's still holding the channel, actually came into the lower end of that channel really well, but it hasn't made it back up to the upper end of the channel. So the typical pattern that we would see in here is that with a head and shoulders, with a turnaround, what would happen in here is it would go and it would try to form a bigger avalanche and break down. But because of the way the momentum shifted, that opens the door that this can do a phoenix. So you get your one move up back here, your two-wave correction, and then your second move back up into that zone. And that's kind of where we're at right now, but it's just not having much luck with the momentum getting back up to that upper side there. What happened here today, of course, didn't help matters whatsoever, but that was the pattern that we were starting to see, trying to develop. This, however, now leaves it more open that it can shift go and break down, and this could still go into a longer avalanche. So like I said, looking at the daily time frame, when we're looking at the intraday time frame, this momentum could easily shift in here. There's not a major bias currently because of the conflicting trend placement, the conflicting momentum, all of that going on the multiple time frames. So that means basically a lot more caution over the next week or so. Let's see here. I'm going to pull up our Russell. So I thought I had one open. Here it is. Turn this off here. I'm going to turn this over to the week. We'll go from top down here on this one too. While it's doing this, I'm also going to, that should go back further, but I don't know why it's not. I'm going to also add our bonds on that one to load, and I'll put on the ES, I will put wheat since we've been watching that as well. Okay, so on the Russell, let's go back to the daily, I guess. There we go. So on the Russell, what we've been having try to form here is this Phoenix. So this has the several waves down. I don't know why that's not showing more data, but it has a several waves down, and then this is going into that Phoenix formation. You'll notice here it also had similar issues with this pulling down too sharply in here and again in here. Took this shift in momentum to bring this back up into the highs, but because of these stronger drops and how much longer this has gone on, it's kind of making this tricky. It's not having as easy of a shot just going and giving that breakout for the continuation. So even what we have here on the daily chart with the Russell is kind of up into the air as to how this is going to play out, because technically it could treat this as the first two-wave pullback, this as a two-wave correction, and basically go into this as a version of a shallow avalanche. And those of you that are in League of Traders, we had a whole week of discussing the shallow avalanche just a week or so ago. And basically, the core pattern for it looks like this. And that's the core pattern. And so you get the slower correction, the slower pullback, or correction from that, and then it will go and pick up momentum. So you can kind of see, based upon how this is forming with wave count, that can still be part of what's going on in here. We cannot completely rule out that possibility here. So this is where we call it a do or die point, or not a do or die point, a zone of pain rather. It is also a do or die point too, because it's going to have to decide one way or the other here, really close within the next month, which way that's going to go. So other versions of our shallow avalanche will look like this. They'll have two waves down, and then they'll look like they've got a third wave. right? And then they'll have what looks like just one wave up, and then they'll crash. So that's another version of where things look messy. And so it will have just, people will count like 1, 2, 3 waves down, one wave up, and then they're like, what is going on? I don't understand. Why is this breakdown so sharply at that point? And it's really because it's viewing this as the two-wave correction, it's viewing this as a two-wave correction, and it's just another version of what's going on in here. It's one of the trickier patterns in the market, but it is something that unfortunately, because of the way this is playing out with the momentum, that is a possibility in here. So usually when something pivots at a high like this, holds that high, we go into patterns like shallow avalanches to gain momentum. And that's kind of what this is trying here on the smaller time frames. So here you can see it on the 2000 tick chart. Here is the pullback. So you got your one wave, two waves, one wave correction, two waves correction. Look at this. People would say, oh, it's 1, 2, 3, 4, 5, or one wave, two wave, three waves down, two wave correction continues. But if you think about it the way that I just showed you, you're going to catch more of the trades because it helps prepare you for this really rapid breakdown, which we were looking for the potential that this could go into a secondary move on the downside. And the fact that it didn't is actually more of a rare occurrence. Usually this will go and it will want to put in about double what this initial two-wave drop is when it goes lower. So you'll usually see a bigger 1, 2, 3. And this was kind of the do or die point for getting that 1, 2, 3 happening, and it didn't happen. It shifted momentum. It really should have gone right here, basically. Kind of the slowdown kind of helped kill it. And then it turned around, and this action in here is kind of like what we're seeing on that daily chart, where it can kind of go either way. It's kind of just iffy in there. It gets past like the best point to go. This is kind of a head and shoulders in here. So what it's doing is it's trying to do the same amount of time development for this correction to lead to another wave down. So currently on the 2000, it's also showing us that it's, even though we can see where it would have the possibility to break higher, things so far just are not allowing that to happen. So in order for that to happen, what we would have to see is for that, when this tries to break down, that the overall channel would shift so that it treats it like a two-wave correction, and then the two-wave here shifts momentum, and then that would allow it to go back up. But that means that this in here can get really choppy. So if you are on the downside, looking on this as the continuation move coming out of this shoulder here, then what you have to see is sustained momentum, pretty comparable to what's going on over here, where you can see these previous impulse moves. You can see the size of these previous impulse moves. You want to see that momentum sustained. It could do it with a two-wave move, where there's a little bit of a kneecap in the middle and still goes, but it needs to be pretty sustained. So if this goes out, bases out too far here, what that does is it shifts the overall momentum of that channel. And that's what could allow this to pop again. There's actually a lot of examples of this that happens on smaller intraday charts. We see this all the time on corrections. In fact, it happened on, let's see here. Grab an example. I saw one earlier today and I'm trying to think of what it was on. Not seeing it now. But basically what it would look like is, goes like this. You'll have the two-wave drop, and then when it tries to go for the third, it just has to move like this. And that third can have like a two-wave move in it, but it serves to shift the momentum from here to here. And usually there's a major support zone that's in here, and that can get this going more strongly on the upside again when that happens. We saw some versions of this on the Dow earlier before the crazy sell-off. Let's see, Richard says, the White House just came out that they are deliberating on delisting all Chinese companies from U.S. stock market. Eek. Man, you know, this type of stuff we just did not have kind of this environment, you know, when I started trading. It's just a whole new world out here. The thing that's hard right now, I mean, there's like so many things that are like threats, then things don't happen, and then it's like, ugh, you don't even know what's really going on. That actually can play into what we see on the monthly timeframes in the overall market with the uncertainty, with all of the extra volatility that has come in over the last couple of years. We can't totally blame that on like internet news and all of that stuff and like the media wars and the White House. We can't totally blame it on that, because when we saw what was happening on the monthly charts of the indices, they were already at points in the market where that type of increased volatility would already be very, very common. It's what we saw back in 2000 before that crash as well. We saw the same type of thing happening. In fact, you see the same thing here up here on the Russell, just going into the 12th on the 2000 tick chart. Where we are up here, this is where we are on the monthly time frame of the NQ. You can see, you know, it had the regular swings and then things start getting more volatile, you know? I mean, granted, this Russell here is smoother on the 2000 tick chart than that monthly of the NQ was, but it's really the same sort of action. It's not something that we can totally blame on, you know, politics or anything like that. It's just a typical market cycle. We were even looking at that possibility a few years ago, and it just took a little bit longer to play out in the overall market. Let's go flip on over here. I'm out of my gold trade, so that's less distracting. So we're going to flip on over here to bonds. Here's our daily chart on bonds. Gold, for those of you that are in League of Traders, you'll notice it just had that kind of double top where it went and hit the previous high, and then it pulled back. I'm actually going to just pull up this gold chart here for you guys quick, since I keep referring back to it. Show you guys what I had going on over there. It's distracting me as we got started. And then we'll come back and look at bonds here. So here's gold. So what we were looking at here on gold is, you know, here's when the news hit, crazy, right? Okay, we got the avalanche, and then kind of the market, you know, shifting in here, pulling up. So you got your two-wave move up, we get a two-wave correction, two-wave move up, exhaust the move. So here's a resistance, and then this is the second chance at the resistance. So this goes back to the League of Trader classes at the beginning of last month. So these are places where you can initiate trades at exact pivot highs and lows when you get these type of patterns forming. So that is where we're at on gold, and this is probably going to chop around here. And the rest of the day, when we have news that and things like this that hit, the rest of the day can get a lot more choppy. You're not as likely to get as many great trades after the initial reaction settles down. So you can get some good, volatility trades after that news comes out. But once it starts to settle down, I guess maybe people just get a lot more cautious. So you don't see a lot of really strong setups in the afternoon, like later in the day, because people are more hesitant, especially if it's news like, what Richard posted that, well, they're considering doing it, but okay, what is that actually going to amount to? And we're heading into a weekend, and now nobody wants to place a bet as we're going into the weekend because, hello, Twitter post, crazy releases, news out of China, anything can happen over the weekend. So my bet is that this afternoon is going to be pretty darn boring from a trading standpoint. Let's see here. So we're going to go back to the bonds. So bonds here on the daily, they had that same exhaustion blowout here on the daily chart. So what we've got going on here on the daily chart up here, again, similar to like what happens on the monthly chart in the overall market, where it gets that crazy whiplash type of move going. We don't always get this flush like this though. Sometimes it can go like that, kind of push higher and play out like that. Sometimes it just goes into a longer trading range. It's more up in the air, depends more heavily upon the smaller time frames. A lot of times see this high here? This pullback, a lot of times will come back and do an absolute retest of that low. And that can serve as a good spot to get a little bit of a bounce. Sometimes it can go, if it's a really, kind of rolls over at the top, that can go and even continue with selling. That's more common when the rollover is a little bit bigger. So like if it started, like let's say this shot up here and then started to roll over, you'd be more likely to get a two-wave correction like that. When we go down to the intraday, you'll see more details on this here. Maybe I'm going to pull up the 240 minute. I'll just change this to a 240 minute. I know I need to go back over the weekend here and redo all my charts on this computer. I change things back and forth so much that I'm always pulling up different stuff and it kind of throws everything off. So many things to do. You got to remember to do them when they come up. So here's another example of what a typical shallow avalanche looks like right here. You see the two-wave pullback, you kind of see the two-wave bounce in here. It comes back, it kind of does that like kneecap position, and then it heads lower. So what can often happen at that point is things will shift. And then that can lead to a stronger bounce. So the fact that this had this extra flush here, it didn't need to flush that much. It could have just had a smaller little flush and turned back around. We don't always know how far that little flush is going to go. Sometimes it's a little bit more, sometimes it's a little bit less. So typically, it could go like this, where it has like a two-wave move in this kind of like third wave down. So it'll hit one low, two lows, and it will go for a third low. It can break the channel from the first two lows, but it will do it a lot of times with a two-wave measured move and then pops back up. And if this is still really steep, it might come and pop up and do a retest before it fully turns back around. So that's really common after you get, stronger drops to the downside, that it turns back around like this. In fact, if you did a screenshot on this, you're going to see this template play out over and over and over and over again. So, bonds on the 240 are really kind of up in the air. They started to gain momentum here. They're more than a 50% retracement, probably about 61.8. Yep, exactly. Exactly, 61.8. And they're kind of shifting in here. So intraday, this could even do a little phoenix, kind of come back up, retest that, and then react off of that high again. So there's not a larger time frame setup on this at this point. It's just kind of reacting to this midway zone. So you'll notice this is actually 50% retracement that's holding as resistance, because even though it pushes up to 61.8, look at where it pulled back to. Pulled back to the 38.2. So that means our 50% goes right smack through the middle, and that all of this congestion and action here is really part of the 50% resistance. So there's not really anything I would do on this, currently. Here on wheat, we have this nice pullback into the support here. This looks so much like what just happened on the NASDAQ on a 50 and 100 tick chart. I want to show you that in the background. Right here. I'm going to squish this down here. Maybe do it like, kind of see both of them at once here. So what we got is this really strong move up, and then you get the sharper start to the reaction, and then it kind of starts to shift. And you get the flush, and then the bounce. So this could easily play out here on wheat, with this kind of going into more of choppiness. It could pull up to here, that zone eventually, if it does like a two-way, tries to go for a third, just depends on the momentum of these moves. This one you'll notice had a really flat base that helped keep the momentum up so that it was able to pull easily to the point where the momentum started to shift. On the other hand, here we've got a little bit of a sharper pullback here. So here's where the momentum was starting to shift. Trying to get fully up to that point is going to be trickier because of how this pulled back. It means that it's more likely this is going to be a little bit slower. So we've got to be a little bit more cautious as it comes into this zone, as opposed to saying, oh, it's going to be able to fully go up to there because this one did. More of a chance it might not make it there because of that more rapid correction right there. So what do I say, guys? Trend placement is what? Here's trend placement. Trend placement's king. What's momentum? Queen, right. So you can have trend placement, but if your queen's not there, you're in trouble. So watch out for that. These guys work as a pair. They are a team. This is not an empire that can run on one ruler here. We need them both working together. If they're fighting, it's not going to work too well. All right, let's see here. We got some questions on some individual stuff. And by the way, speaking of that, the 50 tick here just gave a buy on the NASDAQ. You can see that shift in momentum here, where trend placement and momentum were working together. You got your two waves. We got the momentum shifting. 1, 2, 3, that extra little flush. And then a nice little bounce there. Just a 50 tick chart, but you at least get to see, hey, this is what we're talking about here. All right, I'm going to pull up those other charts. We got US oil, USO. Pull up our monthly. Looks like it's going to break down again, doesn't it? Got this continuing to shift here. Oil in general, actually gold was basing here too. Here, let me go look at my oil futures chart over here. And the futures would look a little bit different. They're just a little bit smoother than USO is. They're going to trade the same, obviously, but it's just a little smoother. So here's our two-wave move in here. Here's our channel for this. So what I'm looking at is this as a breakdown, and then this becomes like a do or die point. So the question mark is, this pulled back more than 50%. For a full strong breakdown of that entire range, I wouldn't have liked for that to happen. I would have liked for this to have done this pattern closer to the lower end of this, and then it would keep going really fast. But overall, this is still looking pretty bearish to me. Our main support to start with, of course, is going to be the lower end of the channel. What we want to see is hardly any reaction to that level, and then a rapid breakdown coming out of that. The indices are almost all right back down to those lows here, you guys, from the sell-off. Let's see, target, question on target. Target's doing a good rounding off. You've got a momentum reversal plus here. But the larger time frames, the momentum is so strong that's having trouble really following through on that momentum reversal plus. Because if you look at the weekly time frame, you don't even really see that momentum shift from the momentum reversal or the plus. So here's the momentum reversal, 1, 2, 2, 3, and then here's the plus where it kind of comes back up, pops back up once more. But on the weekly and monthly time frame, we've got the 1, 2, 3 here. This is actually something that would be a 2T if the momentum wasn't so crazy high up there. So what we would be looking for at this point is something where we actually see momentum shifting on the weekly time frame. For this to hold and keep selling off, holding that momentum reversal plus on the daily time frame, what would usually happen is we would get more of that back and forth action. It would go into a shallow avalanche, and then that would drive the momentum back down to this low. So it would start out with a channel that would go more like this to start with, and then drive that momentum back down. And that is certainly possible, just because of what we saw with that little smaller setup there. That's definitely a possibility of that happening. But if it doesn't like materialize into that, we could still see things shifting like this. at that high. I'm kind of leaning towards the former versus this version. I think that we're more likely to see like the choppier start of selling and then see selling increase. That's what I would be leaning for on target. But we got to know that if the selling slows, like let's say you get a really nice solid two-way pullback, right? Comes back up and then it goes more like this. That's more likely to then do another pop. So it will try to do more of that pop like that if it plays out like this. Right now, I don't think that's going to happen, but just be aware of that possibility there. Donna. um, let's see. Did I get everybody's questions? I think I did. RH. Okay, so RH weekly, you've got nice measured move, exhaustion here. You can see the two-wave measured move in here. So this is a good exhaustion point on the weekly. It's also the same type of situation that we saw happening on target as far as how this can correct. So this can go into like a little bit of a bigger correction, you know, where it's bigger than these little kneecaps, and do an extra push up there. That is still a possibility here, something like that that could help shift the momentum on this weekly. I'm going to go back up onto the monthly on this too, though. So monthly, what we got is the kind of the three waves, shift, correction, fourth. This is usually an exhaustion move. So this would usually pull back into this here. Daily could still do a shallow avalanche. So watch this really closely here. So here's kind of your pullback. If this holds like this, that can get going on the downside, and it can break it on the downside. But I would be really cautious buying anything at this one. I think that this could easily start to do a bigger correction here, just because of that larger weekly and monthly are really good for corrective moves. Next resistance on gold really is that all of that chop from yesterday and the day before. So you guys that were looking at gold, I definitely think it can make it back up into there, given the way this has acted. It had like that inverse head and shoulders off of the lows today. I'll pull that up and show you guys. I know a lot of you were asking about the ETFs, but I'll just show it here on futures. So here's what we're looking at right now. So this can go and do that to get up into this zone here. So this move here was shorter than this move. So that can actually have the potential that it can pull it back up and kind of get that gain in momentum here. Here's the inverse head and shoulders this morning. So this is the resistance that it's aiming for. Right now, current resistance is basically the lower end of that. And this is, you know, kind of nearing some of these more comparable, smaller impulse moves here. All right, gang, I think I got everybody's questions there. So we're going to go ahead and wrap up here. Like I said, the rest of the afternoon, use a lot more caution because as the day goes on, the risk is going to increase because people are going to go flat ahead of this weekend. And so usually the last 2 hours of the day on a day like this, kind of dead. Um, not as much activity. So I don't expect today will be too much different from that. So it's one of those good days, to kind of take off a little bit early. All right, everyone, have a wonderful rest of your day, and I will see you all back here next week. You are very welcome. Oh, yep. So there is a question here, you guys. Before you guys leave, let me cancel this. There's a question. I had a special offer on 3 months for League of Traders Live for 150, and they asked if they can still get that. Yes. Let me see. I'm gonna grab you guys the link though. I don't have it just up here. So if you're interested in that, stick around a second. I'll grab you the link. And I'll just post it in the chat box. So everyone else, I will see you next week. Those interested, stick around. I'll grab it and I'll post it here. Okay, it is just tonyhansen.com/LOT, all capital letters, 150. So www.tonyhansen.com. All right, there you go. Okay, guys, take care all.